Welcome to our VGT quiz. Today, you'll face questions about the Vanguard Information Technology ETF. Some easy, some tricky. Can you get them all right? Don't forget to subscribe to the channel, and let's find out. What type of investment vehicle is VGT offered by Vanguard? An information technology ETF. A mutual fund. An individual stock. A bond fund. VGT stands for Vanguard's Information Technology ETF, designed to provide broad, low-cost exposure to the tech sector. What is the main objective of VGT regarding its underlying index? Outperform the index significantly. Mirror a specific tech index. Invest in various global markets. Provide fixed income returns. VGT's mission is to mirror the MSCI US IMI 2550 Information Technology Index, offering broad tech exposure. What kind of assets does VGT exclusively hold within its portfolio? Bonds and commodities. International stocks. Real estate investment trusts. Pure tech equities. VGT focuses solely on pure tech stocks, equities, without including bonds or commodities, concentrating on technology sector growth. In which geographical region does VGT primarily invest its assets? Emerging markets. European companies. US companies. Asian tech firms. Over 99% of VGT's assets are invested in US companies, focusing exclusively on domestic innovation and growth. As of late July 2025, which company constituted the largest holding in VGT? Microsoft, Apple, Broadcom, Nvidia. Nvidia was the largest holding as of late July 2025, accounting for approximately 16.8% of VGT's assets, reflecting its market influence. What is the approximate annual expense ratio for investing in VGT? 0.09%, 0.40%, 0.9%, 1.30%. The expense ratio for VGT is just 0.09% per year, which equates to 90 cents for every $1,000 invested, making it very cost-effective. What percentage range of an investor's equity portfolio is suggested for VGT? Over 50%. 5 to 15%. 20 to 30%. Less than 1%. A realistic slice of 5 to 15% of an equity bucket is suggested for VGT allocation for many investors, allowing for growth while managing risk. Which investment strategy helps mitigate the inherent volatility in the technology sector for VGT investors? Timing the market precisely. Investing a lump sum annually. Dollar cost averaging. Frequent trading. Dollar cost averaging, or dripping cash in monthly, helps smooth out tech's notorious volatility by averaging the purchase price over time. Where should funds be kept if they are needed within the next few years? Invested in VGT. Placed in long-term bonds. Parked on the runway. Allocated to cryptocurrency. Money needed in the next couple of years does not belong in VGT, which is suitable for long-term growth. It should be parked as short-term cash for liquidity. Which sectors are suggested to pair with VGT to balance a portfolio? Technology and communication. Industrial and materials. Energy and utilities. Healthcare or consumer staples. It's recommended to pair VGT with sectors that zig when tech zags, such as healthcare or consumer staples, to keep your overall investment voyage steady.